Hello, I'm Charles Gwynn and I'm a certified aging in place specialist. Today I'm going to share with you how different types of loans can enhance your life during the different phases of your life. Then we're going to look at ways to handle some difficult retirement situations. And finally, a look at having a comfortable, secure place to live for the rest of your life. The majority of people I meet have two concerns: not outliving their money and having a secure, comfortable place to live for the rest of their lives. Here's how the various types of loans that you may get throughout your lifetime help you meet those goals. The type of loan that is helpful for you changes 3 times throughout your life, and it is dependent on the phase of life you're in at the time. For this purpose, we're defining the 3 phases as: first, gaining knowledge and skills, or the learning phase. Then comes the earning and building assets part, the working phase of your life. And finally, the time to be using assets, or what we may call the retirement phase. Let's explore how each phase builds on the one before and how various types of loans can help in each phase. During the first part of our lives, we are gaining knowledge and skills. Starting from walking and language, then primary education, apprentice or college, right through to higher education or advanced training, we are building what we need for the next phase of our lives. During this first phase of life, we might use a student loan to help us get education and training that we need. Then the second part of our lives is the earning and building assets phase. This is where we use the education and training we built in the first phase for our employment. We may work for a company, have our own business, or a combination of the two. In any case, this is where we work to sustain ourselves and raise our children. And while doing that, we do our best to build savings and retirement investments and possibly earn a pension from our job. A great majority of us also purchase a home as a combination of a place to live and an investment. In this building assets phase, we would use a traditional mortgage loan to finance our home purchase. A traditional mortgage loan is designed to build equity in the property by the monthly payments, paying down the loan balance, and eventually paying it off completely. Paying off or paying down a mortgage, together with the fact that real estate increases in value over time, can significantly increase our assets. Then we get to the third phase of our lives. Some people call it retirement, but whatever you call it, this is when we should be using the assets we've built in the second phase to support the lifestyle we want for our retirement. In this third phase of our lives, our income usually becomes more fixed, as it is from Social Security, pension payments, and investment distributions. Because our income is fixed, our priorities change from income and building to limiting cash flow out and to using assets wisely. One of the biggest fears people have is outliving their money. Some of us have had the good fortune to have built enough assets to pay for a comfortable life, and that's great. But studies show that a great many of us have not been able to build the savings, retirement accounts, or pensions needed for a comfortable life. Or we may not have been able to put money away for unexpected expenses, increasing medical costs, or home care that we'll need as we age. And we know that at least 75% of us will need some sort of care as we get older. We should be prepared. There are also those who are entering this phase of life with a significant traditional mortgage, and the monthly payments are draining our savings accounts or using up our monthly income. The majority of us find that the only major asset we have is the equity in our home. For income, we may have the monthly Social Security payment, and possibly some small pension or interest income, either just enough to get by or not quite enough. So we are depleting our meager savings each month. These three situations, not having enough savings, still having a monthly mortgage payment, and not having money put away for future care or unexpected expenses. These are the situations where we could use the home equity conversion mortgage that we commonly call a reverse mortgage to give us more security and a better life. Before we go any further, let's consider alternatives for handling these situations. First, let's consider a traditional mortgage loan or a home equity loan. Getting a traditional loan or refinancing the loan you have is virtually impossible for folks on a fixed income due to the fact that there is strict income and employment qualifications nowadays. But even if you could get one, it's a temporary solution because the burden of the monthly loan payments would only make your situation worse. You would end up using the money you borrowed to make payments on that loan. And that's a true house of cards, and eventually it will come crashing down on you. You could sell your home to get the cash and then rent an apartment. Of course, you would have the realtor commissions and other costs of sale, the moving expenses, and most likely even after a homeowner allowance, you would still have some capital gains tax to pay. All this would significantly reduce what you get in the end. But the sad fact is that if you live long enough renting, your money will eventually run out. And then what do? Put all your stuff in a grocery cart or maybe go into a Medi-Cal or Medicaid paid nursing home? It's not the best outcome. Now let's see what a reverse mortgage will do. Simply put, a reverse mortgage gives you access to some cash from your home's equity without you selling and moving out, and without the financial impact of monthly payments reducing the money you have for living expenses. Here's how it works for the situations I just described. If you were unable to collect enough savings, you could use the reverse mortgage to supplement your income with monthly payments for the rest of your life. Often that, together with Social Security and any small pension or retirement account that you may have, will be enough for a comfortable life. If you still have a mortgage with monthly payments, you could use a reverse mortgage to pay off your existing loan, so you would have no monthly payment. As an example, let's say you have a loan with a payment of $2,000 a month. If you could pay off that loan with a reverse mortgage, you would not have that monthly payment. That means that $2,000 would remain in your bank account each month. For most people, that's like getting an additional income of $2,000 a month. In the third situation, not having money put away for future needs like home care, medical expenses, or unexpected expenses. That can be compared to not having long-term care insurance. Statistics show us that 75% of us will need some sort of care as we age. That care is not free, and we should be planning on how to pay for that care if we need it. Very few of us have long-term care insurance because we have to medically qualify, and it's costly, especially as we get older. Preparing for future care needs is another smart use of this financial tool. Here's how it works. Let's say that with the combination of your home value and your age, you qualify for $300,000 from a reverse mortgage. You get the loan, but you don't take the money up front. Rather, you leave it in the line of credit that comes with the loan. That means that you have access to the full $300,000 or any part of it anytime you want, but you haven't actually borrowed it, and it is not accruing interest. This is called a standby line of credit. It's standing by for use if you need it in the future. There's an additional growth feature to this standby line of credit that gives you access to even more cash as time passes. The Department of Housing and Urban Development, HUD, has mandated that lenders must increase the line of credit over time, and it's not tied to your home's value. So even if there's a downturn in home prices, you still have access to the full $300,000 cash, plus the additional money due to the mandated growth increases. That money is there if you need it for in-home care, medical bills, adapting your home for handicap access, unexpected expenses, or anything you want. You may never need it, and if so, you will have never borrowed it and you will never have paid interest on it. This is unlike long-term care insurance where you pay, and if you don't need it, all that money is wasted. For more details about the workings of a reverse mortgage, you may see my other videos or go to my website, charlesgwynn.com. And finally, let's consider how a reverse mortgage guarantees you a place to live for the rest of your life. Since the reverse mortgage has no monthly payments, your home can't be taken away from you for not making a payment. Your responsibility is to make sure that the property taxes and insurance are paid, that the homeowner association dues are current if you're in a condominium, and that the home is maintained as livable. These are things that you would have to do with any other loan, and of course they must be paid even if you don't have a loan. Having a reverse mortgage and meeting these minimal obligations guarantees that you have a place to live for the rest of your life. In addition to that, you are able to use some of your home's equity to have a better life. I hope this video proves useful to you. We looked at how different types of loans are beneficial to you during the different phases of your life. First, the gaining knowledge and skills or learning phase, where a student loan may come in handy to help you get the education you need. Then the building assets phase of life, where a traditional mortgage, along with the increasing real estate values, helps you build equity resources for later use. And finally, the using assets or retirement phase of life, where a reverse mortgage loan allows you to access the equity you built in your home without moving or having the negative cash flow of monthly loan payments. The goal for you is to have a comfortable, secure place to live for the rest of your life. There's a lot more to know about reverse mortgages before you would get one. One way to learn about them in detail is to visit my website at charlesgwynn.com. Also, you may see more of my videos that provide simple, easy to understand answers to other questions such as, are reverse mortgages really more expensive loans? What are the 3 ways you can get hurt by a reverse mortgage? And how does a reverse mortgage affect income tax, Medicare payments, Medi-Cal, Medicaid, or VA benefits? To get the latest videos, you may want to subscribe to my channel. The home equity conversion mortgage was designed to help people with certain financial needs and goals. Correctly applied, it can help you have a place to live for the rest of your life. But if used the wrong way, it can be devastating. So I would like to leave you with one thought. Don't get financial products like investments, insurance, and mortgage loans on the internet or over the phone from an 800 number phone salesman. Make sure you know the qualified professional you're dealing with, where they're located, how to contact them after the loan closes, and know that they are dedicated to doing what's in your best interest. And that should include telling you not to get a reverse mortgage if it's not the right thing for you. I hope this information has been helpful to you. For more information on this topic or anything to do with aging in place, Social Security maximization planning, or reverse mortgages, please visit my website at charlesgwynn.com. Thanks for watching.